Good morning, everybody. Welcome to the Flow Show. Another quiet one. Monday, the 6th of October, and fireworks already today, particularly in the yen if you've just woken up. We'll get through all those headlines shortly, and we'll see what's going on while I keep half an eye on what markets are doing at the moment, because a couple of trades going on. Right, let's get stuck into it. China has apparently offered the US and Trump a huge investment incentive to roll back some of the security restrictions Trump put on Chinese firms operating in the US and importing goods from China. Investment into the US has almost come to a grinding halt from China. So they're trying to dangle a bit of a carrot in front of Trump to get that ball rolling. We'll see whether that leads to anything. I'm going to save the Japanese stuff for last so we can take a big clear look at it. So I'll skip over that for now. Over in the UK, a report in the FT is saying that the government is potentially going to tout 47 billion in spending cuts. But actually, that might be wrong. I'm just going to have a quick look at that, because it's the headline actually says it's the Conservatives who aren't in power. So maybe that's just a pledge by them. If they get in power again, they're touting 47 billion in spending cuts, but I can't see why that wouldn't be Labour saying that. Anyway, I'll check that out. Moving on, ECB's Lagarde says the euro area has shown more resilience than anticipated. We are in a good place and have to ensure we stay there. I'm not sure if resilience means not getting any worse than where they already are, rather than improving, because from where I sat, there's certainly not been any improvement in economic data coming out of there. Right, your next bit of fun and games in politics. On Friday, French PM Le Cornu proposed his budget stuff, which got shot down by French socialists. And then over the weekend, Macron officially appointed him as PM in his cabinet reshuffle. So effectively in the job a few hours, and then today he resigned. So the PM lasted 27 days since he got elected, and not even half a day since Macron officially unveiled him in his cabinet. That's given the euro a little bit of a kick in the nuts. That news coming a bit out of the blue. I mean, it was a bit of a poison chalice he was holding, or he picked up, but I don't think anyone expected him to end up leaving as quickly as he has. This is already leading to calls for Macron to hold an election, something he's been putting off, but it might be that this actually forces his hand, and we do see a snap election coming, which on one hand, if it turns out there's a clear winner with a clear majority that can form a government and pass a budget, would actually be reasonably positive for the euro. But let's see if we go there. He's clinging on by the skin of his teeth, his old Macron. We had a bit of data out this morning in Europe, nothing massive. We had the construction PMIs, where Italy saw a bit of an improvement, just 2 pips below that expansion level. Germany rose 2 pips over last month. France, shock, went backwards. And the pan-Eurozone number reflecting all of that, going backwards as well. So still all in contraction in the construction sectors over there. UK numbers there as well. A little bit of improvement to 46.2 from 45.5. We also had the Eurozone Centix index, which improved to a negative 5.4 from a prior minus 9.2. Not that anyone pays too much attention to that. And European retail sales coming in a pretty disappointing 0.1%, as expected though, but not exactly having a boisterous summer over there. Going back to some of the data from last week, and we had the PMIs, the services PMIs, and it was all a little bit meh. First, we got a bit of surprise from the final S&P Global number that improved to 54.2. Then we got the ISM number, which pulled back worse than expected. It was expected to drop from 52 to 51.8, came in at 50. So just on that expansion contraction line. In the important numbers, we saw prices going up 69.4, and employment was less crappy. So good news there for employment, although it's still in contraction. Not such good news for prices, which rose. So that keeps a bit of pressure on the Fed for that. But overall, not huge amount of change in those numbers. Pretty marginal, really. So nothing much for the market to get its teeth stuck into. For lack of any other data, we have to rely on some of the Fed surveys and all their guessing games and pinning the tail on the donkey. Blind darts. The New York Fed GDP nowcast for Q3 just dipped to 2.36% from 2.55. Their Q4 number also dipped to 2.25 from 2.46. We had Fed Goolsbee out saying the longer we go without the official statistics, the more blind we will be about what's going on in the economy. Fed's Mirren said access to data is important to making policy, and hopefully we will have needed data by the next FOMC. It says financial conditions matter to the transmission of monetary policy, and even though financial conditions are loose, policy is tight due to the neutral rate moving down. He doesn't think his position on rates is extreme. He just wants to get to neutral faster. He also says he's not had an interview for the Fed chair. That might change this week as we get another round of interviews. Fed's Logan, bit of a repeat, saying sees both upside and downside risks to inflation outlook. We really need to be cautious about further cuts. Fed's Jefferson says the Fed will be well informed going into the October meeting and has enough info to do its job. Bank of America has pulled forward its rate cut expectations for the Fed to October from December. So speaking of the shutdown, there was some last minute attempts to get a vote through the Senate. That failed, which now means that there's no clear path to the government shutdown ending. House Speaker Johnson has decided not to bring the House back next week. So it doesn't look like we could get anything this week on the face of it, but they can always do something. But that's still dragging on now. Trump has been dangling the threat of all these government jobs being let go. That has been part of the sword that he's been trying to hold over Democrats to get them to come to the table. Now that's not happened. He says that the firing of Fed employees is taking place right now. So we'll have to hear how many, who, why, where, and when that's going to drop. One bit of good news, potentially a bit of good news. Trump gave Hamas a threat of 6 p.m. Sunday to release all hostages. And anyone else and anything else. That threat seems to have worked because Hamas has agreed to release all hostages, and they're just working out the details of that now. So hopefully that's an end to that conflict, and some people get returned to their loved ones. So that's ongoing. Russia, Ukraine stuff, no real movement in terms of talks or anything like that. Russia's been attacking various places in Ukraine, and that's still kicking off there. But otherwise, that's still ticking along. Right, over to Japan and the big shock news. PM is now Takaichi, was the most dovish for the yen. And we've seen that react obviously in prices this morning. Stick on the old dollar yen chart, a big massive gap there. Now, as I said, I warned about this last week with the polls amongst LDP lawmakers, members pointing to Koizumi. The shock move would have been if Takaichi had won. She has won, and hence why we're seeing this huge reaction in the market. What wasn't good was her first comments out saying that we need to consider if the current accord with the Bank of Japan is best, and that the Bank of Japan should think of its best methods on policy. She previously was a bit against them hiking, going so far as to call it a stupid move. So that's obviously given the market a big jolt as well. She wants to boost inflation through higher wages, which would then boost the economy. So she's going to be looking at potentially, like some of the others, maybe giving cash handouts, looking at tax rebates and tax changes. One item that might be a bit calming for markets, not that you'd think it looking at these prices, is that she said she was going to uphold the deal that Ishiba made with Trump over trade and tariffs and stuff. So she's not going to tinker with that at the moment. She's been slowly lobbing out who she's going to be dragging into the top seats in her party, in the cabinet or whatnot. Apparently she's going to look to have Koizumi, who came second to her in the leadership race in her cabinet, as well as ex-finance ministers Suzuki and Aso. So some of the old guard going in there, along with Koizumi, who would sort of be considered a bit of the new guard. 15th of October is I want to say it's a very important date, but it's when officially Parliament is going to convene to officially remove Ishiba, or vote to remove Ishiba and put her in as PM. So it's a bit of a procedural event, but it still comes down to votes. So there still is a chink of risk that something might happen and she doesn't get voted or she doesn't get voted, but it should all be a done deal. But that's the date anyway. As you can imagine, we've had a shift in Bank of Japan rate expectations. Hike is now seen at 41% for December versus 68% on Friday. I think similar numbers are being seen for the October meeting as well. So the real question from here is whether she is going to be as hardline as everyone has been expecting, as you can see from the market move there. And give me a moment, because I might just, I took a little dollar yen short earlier, and I might just close that up as we look like we're breaking the highs, those prior highs. I'm just keeping half an eye on that. But yeah, the question is going to be whether she is going to be as hardline as everyone expects. We've got a lot of volatility in yen pairs, obviously. Nikkei is absolutely moon-shooted based on her stance. I suspect we're going to see the yen stand on the weak foot for a while. A lot of people are going to be asking about intervention. Okay, you know the MOF's line for intervention. They need to see a few sessions of sort of 200 to 300 pip moves. Okay, we've had obviously a big move that was going to be expected by the powers that be in Japan. They would have known this going into this, so they're not likely to step in on this move. If we shoot up another 200 pips, then maybe we're going to start to get some verbals from Japan. But it's a very high bar for them to intervene. It all depends on where we go now and how the price evolves over the sessions ahead. Okay, but don't rule out some verbals coming in if we're trading through 151 later today or something like that. So keep an eye on what's going on this one. Moving over to the Bank of Japan, we've had some regional reports out, just giving us a look at what's going on currently in the economy. The regional reports see a mixed wage outlook. They cut the assessment for one region, but the other 8 stayed unchanged. They say all regions describe the economy as recovering moderately or picking up. Some regions have warned that firms may slow or stop wage hikes if trade policy hurts profits. Others have said they need to continue raising wages due to inflation, labour shortages, and the minimum wage hike. That's a bit of a key comment there, because it looks like the cycle of inflation is starting to turn the right way in Japan, because as inflation goes up, so do wages, so does inflation go up. So they're getting themselves in a bit of a positive loop rather than a negative disinflationary, deflationary loop that they've been in for so long. They say that exports, output, and capital goods orders are declining in some regions ahead of US tariff actions. So not quite out the woods, even with the deal that has been put in place. Right, that's about it for the headline front. Well, everything that's going on, at least. So we need to have a look at what's coming up this week. Just have a look on the data front, what we're not getting and what we are actually getting. Not too huge a week. We've got the RBA coming up, the RBNZ coming up. Any RBA coming up? Where's the RBA? It's not on there. Where's the RBA? Not on there. Oh, no idea. Anyway, so not a lot coming out today. No US data, not even from some of the private surveys. Let me just double check on this calendar just to make sure I know what I'm talking about. So no, nothing on there from any of the private numbers. This employment trends won't happen. So pretty quiet day today. As for the rest of the week, got some manufacturing orders out of Germany tomorrow. We'll get to see whether there's any signs of life for all that government investment. Those two US data points, they won't be coming, so we can forget about those. On Wednesday, we get the RBNZ, and the market potentially looking for another cut from those guys. So we see whether that's going to happen as well. We get some industrial production from Germany, but otherwise it's a pretty quiet Wednesday. We do get the FOMC minutes, but there shouldn't be any change to what we all haven't heard 30,000 times already today. But just we'll keep an eye on those in case there's some comments in there that we don't know about. Excuse me 1 second, doing a bit of typing. Over into Thursday, we get ECB minutes. Again, we've heard from the ECB members 1,000 times since their last meeting, so that shouldn't be anything. And then US data you can forget about as well. So another quiet one afternoon in the US. I really don't know how it all works over there with these votes and with the two houses over there as to whether they can cobble together something, or whether if they shut houses, or if the speaker says they're not going to open, they're not going to open. I assume it can be a last minute thing in terms of whether they can open up or not to get a deal through. But other than that, we're going to be playing this game all the way through. Anyway, on Friday, we get Japanese PPI, and we start to get some of the flash Q3 GDP numbers coming through. Canada jobs is on Friday. We missed that last week. It wasn't a double bubble one with the NFP, so we get that to deal with. That Michigan consumer sentiment should be out because it's more of a private survey than a government one. I assume it's going to be out anyway because it's done by a university. All the rest is going to be dead. So not a huge week as far as these guys go, particularly in the US. So we're going to be headline driven throughout most of it. Right, let me get the pages back out the way. Right, so what are we going to do with all this stuff? Well, we looked at the yen, just to give it a bit of a wider look. Okay, this is one of those moments where you don't rely too much on the techs. Okay, what has been clear though is we've got a, or what is clear, the next big level to keep an eye on is this one up 150s, 80s, 90s and into the figure. It's a level that we've played against plenty of times before. So this is one that you just need to keep an eye on up here. It's a significant level, but as I'm often warning, markets sometimes don't give a toss for coloured lines on a chart. If it thinks it needs to reprice something, then it's going to do that, whatever's on your charts. So just be wary. If you're going to try fighting some of these moves, pick your places carefully and keep them fairly tight, because you do not want to get caught out. You do not need to get caught out 50, 100 pips offside and then wondering what you should have done with a trade. So you want to have a go, like I am. I've given a little go against this high. I'm not too keen on it now because we broke that high. If we don't get down in the next 5 to 10 minutes, I'm probably going to fold up that trade and go back to the drawing board. What has been significant, though, is that we've had the gap up and then we broke the prior 150 highs that we saw late September, and we held them on a test. Okay, so that tells you the market is not yet ready to go down. So we've had reaction from Japan, we've had reaction from Europe. In the next 20, 30 minutes, we're going to start to see the reaction from the US. They could give it another shove higher. From that point, it's all about what happens next. As I said, is Takeichi going to be as hardline as expected? Who's she really going to put in the key places? Positions in her government, what's she going to do with policy? So I think we'll probably at some point move into, okay, we're over the shock. What happens next? And that's something that's going to play out over the next days and weeks. So, I don't suggest that we're going to see, this moon shooting higher continuously day after day, unless she's coming out with some real bearish and dovish comments. So I would say wait until we get the US session out the way, see where things close today, see what Asia, particularly Japan, does with this tomorrow. If they keep on selling yen, then we're not done. If we start to see a few tops forming, then it could just mean we're going to hit a bit of a pause period. Doesn't mean things are going to come all the way down. Doesn't mean we're going to start collapsing back down to 148, 147. It just means any big moves higher are going to need some extra impetus. But this is a bit of a coin toss at the moment, what it does from here. So just be careful trading that. Euro took a bashing over that French PM news. We were nudging around the 107 area and we've been knocked all the way through. We've carved through again. We've carved through a few of these more minor levels, levels that we've just turned around a few times before. So we have broken down under some of these levels. So we should perhaps be looking at a bit of a rally sell from this point onwards, while we wait and see what happens in France. 116.30 is probably half decent level to keep an eye on. Obviously keep an eye on this lows down here, 116.5. Then look down at this 116.30s. But if we're creeping down towards this 116, then I'd keep a very close eye on this 115 level, which is one of my big fat red lines. But keep in context the trend. We are still in this decent uptrend that's been running all year. Okay, this still looks like a minor pullback because we're not even anywhere close to the 38.2 of this trend. So we've obviously come off quite significantly from 119. We could go down a bit more, but there's a long way to go before we even start attacking this trend for now. So just bear that in mind. Okay, what I think is likely to happen with this is that we're going to see a bit of ranging, and I won't rule out a move down to 115, but I think it's going to be a bit harder to see the upside. And I think we're going to be perhaps in a bit of rally sell momentum, at least for the next few sessions, and longer, probably seeing a bit of range trading, because now the market's been given a reminder that this euro hasn't been rallying all year because everything's tickety-boo in the eurozone, and that there's still some basket cases lurking around there. So the market's been given a bit of a reality check, shall we say. So we've still got the mess going on in the US, which favours dollar weakness, the longer that drags on. And now we've got political mess in Europe, which favours euro weakness. So I think we'll find things a bit more balanced. Play the ranges, I think, is going to be the game. I can't see us looking to go up to these new highs unless something happens. Conversely, I don't think we're going to be going all the way down to 112 unless something changes on that side as well. So ranging for me from that point. Euro sterling, that got a bit of a knock. I was long. I'm still core long, but I've been jobbing it around the 87 level up to the 20s, but I've been tipped out of that. We have got down pretty much to the zone, and we found a bit of support ahead of that zone, the top of that zone down there. So I'm not going to touch this one in terms of adding to my core longs at the moment, just purely because of this mess that's happened in politics. But if I see a dip down to the low 86s, I'll probably hoover some up there and job it around a bit there too. I'm still happy to stay long in this, i.e. short the pound with everything that's going on in the UK. But as I say, a bit of a reality check that all isn't rosy in the Eurozone. Gold, I'm going to have a look at as well, because that's a bit of a textbook move in this one. We had those prior highs last week. We busted those highs, and we're holding the break, which is pretty significant because it's allowed this to kick on. So this is I'm actually going to make that white. You know what I've been doing with this one. That's now going to be a significant level. This 39.20 could be significant as well. It was a high on the break, then we broke it, then we held it, then we held it. So this one could become a significant level. Again, where's the top? You can throw a dart as to where the top might come in at the moment. Until we get similar price action to this, even similar price action to this, where you've got reasons why you might get a short against this, don't touch it. Let it go. Let it do its thing. If you're long, you know where you should have been potentially taking some profits on that move there after that high. But if you're long, you know where your pain points are. If you're back below there, then you might be seeing a bit a small washout in the price, shall we say. So shorts need to be very careful again from this point until we get some price action showing what we want to do. Now, one thing that is obviously disconnected right now is the relationship between 10-year yields and dollar yen and yen in general. Everything that's happening now is to do with the yen. Okay, so they've got a big disconnect between yields and dollar yen. Now, unless if we start seeing yields coming to the party and jumping up, that might add a little bit of a tailwind to what we're seeing in dollar yen. But for now, yields are playing nicely. We've got this range 420, and we've got this sort of middle area 408, 409 that we're respecting pretty well. So you know the range for that, and the dollar's going to take its cues from that point as well. Ali, let's see if Euro Swiss has moved in all the things that have gone on. Where are we? Euro Swiss is up here somewhere. I've gone past it. I'm going blind. No, we haven't moved. So you're looking at 03 for your take profit. Okay, yeah. Still looking for that. What was the last low? We got 06. Okay, so you're trying to get some profit just below the last prior low. It's possible. It's on its way down again. I don't know what this one's going to do. It's really is stuck. There's nothing much to say about this one. Time and time again, you look at it. We've been looking at it for the last week, and it's pretty much stuck. Same as dollar Swiss, stuck in this very, very tight range, in between a fairly tight range, longer term. Not moving on risk much, not moving on anything. I thought we might, with that Hamas stuff sorted, I thought we might have seen Swiss pairs ticking up a bit as we've got risk reduction, but doesn't look like we've got anything like that going on at the moment. So cable has been pretty steady as well. For once, the pound can sit back and laugh at politics going wrong elsewhere. We're holding above 134. We're turning around this sort of 134.5 area, where the main resistance is 135, 135.20s. Not a lot of data out for the UK this week either, but we are creeping closer to the budget, and more lines are being dropped and bits and pieces being dropped about what the government may have to do. So keep an eye on those. I'll be watching those carefully to see if there's anything more negative coming for the UK. Aussie, another one not doing an awful lot, sitting back and watching the fun and games, fairly tight range. We've had several attempts up at this 30s area, couldn't get through. Then you get a bit of a sell-off. It finds a bit of support where it needs to. Now we're sitting in the middle. Again, I'm not seeing any major reasons why this one should go breaking any sort of areas. So look for this one to perhaps range for a bit while we wait for some input from elsewhere, be that news or whatever. So really, bit of range trading to go on. Volatility is still coming off a little bit. Obviously, we've got a bit of a spike in dollar yen, particularly in the short-term vols. But longer term, the 1 month volatility has been creeping down in a lot of pairs. So I think if we get to the end of this week without any fix in the US and the shutdown, if we're not looking like we're going to get any solutions soon, I think the market might then just try or just maybe start trading a bit more. Maybe we see a bit of hedging coming in if it's going to last for too long, because this thing is all about the clock. If we get a deal this week, yeah, we'll probably get a bit of a relief rally, and then we'll move on. That'll be forgotten about. But also look at how long the can kick is. If it's just a short one, 7 to 10 days, or just a month or two, the market's probably not going to cheer that too much, because then we're going to have to do all this again into the end of the year. But if it's a kick to February, March or whenever, then the market can forget about it until then. So just, if we get a deal, it may be good news, but it depends what the deal is in terms of that shutdown. Shall we have a quick look at the Nikkei? Not that I've got much going on in there, but we'll have a look just to see where that's going. If I can find it, there we go. Let's see which one I want to pick. Let's pick that one. So a big moon shoot for that. Excuse me, a big moon shoot for that one. Gap up. Obviously, that's good news for Japanese investors. The question is whether it's going to last or not. If she is as hardline, it's going to be a case of whether she's going to really give the economy a boost in her policies, or whether they're not going to work. So that's going to be something that could change what the market does with this. But for now, keep an eye on this, because this is going to be having a big input in yen as well, and what's going on there. So if you're trading these stocks, you need to be very, very careful, because there's a hell of a lot of volatility going in here. And all you gap watchers who are going to watch a gap close, gap trading is not a strategy, because where would you like to sell that? How long are you going to sit in a short waiting for that gap to close? So I put gap trading in the same witchcraft as Head and Shoulders and all the other crap that some people couldn't look at. No, Brad, I'm not looking at Dixie. You can jog on, mate. To be polite, not saying I'm going to look at, unless I'm trying to explain or look at the dollar in general, what's been going on. Dollar CAD, we're stuck in the zone at the moment. After we had this failure, we haven't dipped back too far. We couldn't hold this break level. Now we're finding it as resistance, but we're not really dipping too far. So it's keeping the upside momentum in play, but we're looking a bit weak against this former break point, former high that is now another high. So unless we're breaking above there and holding it again, we can forget moving up here. But it still does look positive. I'm still long in this one, and I'm not looking to cut out of that just yet. Dollar Mex, another one. We've had a little rally up towards the 1850 again. We are seemingly coming up to this more often than we're having a look at the downside. So as I've been saying, the pressure could be building for a potential break trade if we get one through this. If it breaks again, that might be the one that then sort of kicks on. I'm still a little bit short, despite getting, I got a overnight, well, I left a TP in at 1835, which went unfilled purely on the spread. I wasn't about to do that manually, so might have missed out on that one. But if we are looking like we're breaking that again, I'll fold that up if I haven't closed up that short before then. I'm still core short from way above, and I won't be worrying about that unless we're breaking at 19. But if we are looking to bust this one, I might flip this current short into a long if we break above that 1850, as I say, because it might be the one that has legs and then kicks on. Did I take a long on Friday before the elections? No, not at all. I was flat going in. I'm currently short dollar yen, very small, at 150.34, just playing against this high if that high was holding, which it didn't, but we haven't been able to make hay above it. So we have made a new high, so that suggests we're not done going up. But yeah, I'm short at 34. I'll see what happens after we finish on the show as to whether I keep that or let it go. But no, I'm not long. Yes, and I'm long dollar CAD, long euro sterling, and short dollar MEX. That's what I've got on the books at the moment. And I'll trade those as the price moves. Right, anything else, boys and girls, or we might call that an early one, seeing that it's going on. Euro yen. This one obviously took a bit of a knockback, because of what happened with Le Corneau, the PM. So, but we've still got a massive gap up. Sort of similar to dollar yen. It's there or thereabouts. It's trying to hold around this prior high. It had a little poke underneath it, but as you can just see in there, we've had another candle just in there, just around about that high. So just keep an eye on this one as well. Call it round about there. Don't need to be 100% specific. Oh, where's that gone? Yeah. Round about there is where you want to be looking. Just where we had this prior high, we've had a couple of goes at get underneath it. We can't, so now it's pushing back up again. What are you doing in this one? You want to look at the weekly? Okay, let's have a look. Okay, so we had this former highs up here, which we've obviously had a crack at and getting through. That's at the 175, 42, 43. Look for potential if we start getting back above there and holding above there, because if we start holding above that high, and we have made this fresh high, then sky's the limit for this one. It could be kicking on again. If you want to short these yen pairs at the moment, you've got to be very tight and pick your points. If you're doing a longer term trade, fine, then you're going to be trading smaller, maybe wider stops, and you can give it some room. But this does not look like something you want to be sitting in shorts for 2 months right now, because it's looking very strong. Of course, it could happen. We could flip around and come all the way down again. So if you want to short it, you probably want to do it more over a longer term basis, smaller trade, wider stops, so you can incorporate any of this near term noise that we're in at the moment. But where are you going to short it, mate? So me talking about it, let me know what you're thinking. Are you just going to short up here with a 20 pip stop, or are you going to short and let it run for a while? So it'd be interesting to hear what you've got to say, sir, let alone what I've got to say. Right, Aussie Kiwi Ali, not a lot doing in that one as well. It's still keeping up there. We have had a bit of a pullback, as you can see. We messed around this older level 113 2025s. It's got a bit washed out at the moment, but we're not pulling back anywhere significantly. If you take this whole rally into play, take it from there really. Let's give it a that so you can get a rough idea. So just pretty rough. Again, it's a bit like the euro. This move has been very, very strong, and the pullbacks have been very, very weak. And this is really still in pullback mode. This is the big level to keep an eye on, 112.85. If we pull back and hold that, that's going to be encouraging for longs. I might even give that a go myself. But yeah, it's not pulling back too far, even though, you know, this is a fairly decent move. It's been a solid move up. And the harder and faster they go up, the stronger the pullbacks can be sometimes. But this trend is nowhere near turning around just yet. Right, I'm going to call that a day for today. Yeah, not a lot of data from the US or elsewhere coming up this week, so it's all going to be headline driven, Mr. Trump and everyone else going on. And there's lots of stuff, fluid events at the moment, like Japanese politics, French politics to keep an eye on. So take care. Have a great week, everybody, and we'll catch you all later.